Hey everyone, welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today we're diving into a topic that might just be the spark some of you need to finally take that first step into investing. If you've ever typed how to start investing for beginners into Google and felt overwhelmed by the results, I want you to know something: you're not alone. A lot of people still believe they need thousands of dollars to even think about investing. But it's 2025, and thanks to modern platforms and fractional investing, starting with $100 isn't just possible, it's one of the smartest ways to build financial confidence. Today, I'm going to walk you through a step by step guide on building your very first portfolio with just $100. No fluff, no hype, just clear, practical steps for real beginners. Let's get into it. Step 1. Mindset first. Why $100 is more than enough? Let's kick things off by reframing how we look at that $100. It's not just about what kind of return you can get. That $100 is your gateway to real world experience. It's your personal finance tuition. Here's what you gain: you get hands on experience in buying and selling real assets. You get a feel for how markets move, what volatility actually feels like. You learn emotional control when prices drop. You understand how fees, risk, and platforms really work. And most importantly, you build the habit of consistent investing. Most people freeze at this stage. They overthink, read a ton of blogs, and never take action. But investing that $100 breaks the inertia. You learn more by doing than you ever will by reading. Step 2. Choose a beginner-friendly platform. Now let's talk tools. Your investing experience hinges on the platform you choose. As a beginner, you want simplicity, low fees, and flexibility. Look for fractional share support, so you can invest in companies like Apple or Tesla with just a few dollars. Crypto access, if you're curious about digital assets. Low or no minimum deposits. Built-in educational resources. A clean mobile app interface. One great option is crystalballmarkets.com. It's tailor-made for beginners and allows you to open an account fast, trade with as little as $1, and get real-time insights, all without feeling overwhelmed. Step 3. Define your learning goals before you invest a cent. Stop and ask, what do I want to learn from this experience? Some common beginner goals include understanding how ETFs work, getting a feel for crypto market movement, practicing how to evaluate and pick stocks, figuring out your risk tolerance, learning to manage the emotional ups and downs. Once you have your learning goal, you can make smarter asset choices. For example, if your focus is long-term growth, index ETFs should be your first pick. If it's volatility and short-term learning, try a crypto or growth stock slice. Step 4. Learn the basics, really before you jump in. Build a quick base of knowledge. Learn what stocks, ETFs, and crypto really are. Understand market orders versus limit orders. Know the risks of short-term trading versus long-term investing. And yes, this is where a good podcast helps. Tune into the Crystal Ball Markets podcast, where they break down trading and investing topics like Forex, stocks, and crypto for absolute beginners. Great if you're more of an audio learner. Step 5. Structure your $100 portfolio. So now we're ready to allocate that $100. Here's one smart example. $40 into an index ETF like SPY or VO for market-wide exposure. $25 into crypto, Bitcoin or Ethereum to observe digital volatility. $25 into a well-known stock you admire, maybe Apple or Tesla. $10 as a cash reserve, just to observe or use later. This spread gives you diversity, education, and room to react. You're not putting all your chips on one square, and you're learning from multiple asset types. Pro tip: avoid dumping all your money into one hype meme stock or altcoin. Those emotional bets might feel exciting, but they're usually a fast track to discouragement. Step 6. Set up regular investing. Even $10 a month? Next, consistency. Investing isn't a one-time action. It's a habit. Even just $10 or $20 monthly makes a difference. This is called dollar cost averaging. You buy in small chunks over time, smoothing out volatility. $10 per month adds up to $120 a year, on top of your $100 start. More importantly, It turns investing into a routine. Step 7. Track performance and reflect. You want to grow smarter, not just richer. Keep a journal, could be an app or a notebook. Track why you made each investment, how market moves made you feel, what mistakes you made, what you're learning each week. This kind of reflection is how you level up. You'll begin to spot patterns in your behavior and improve decision making naturally. Step 8. Avoid these beginner pitfalls. Let's talk about landmines. Common mistakes to avoid. Chasing hype. Just because something's trending doesn't mean it's smart. Going all in. Diversify. Even with $100. Panic selling. Markets go up and down. Stay calm. Ignoring fees. On small accounts, high fees can really hurt. Stick with low-cost platforms. Step 9. Keep learning and leveling up. This journey never ends. Markets evolve. Your skills will too. Keep expanding by reading weekly blogs, subscribing to beginner investing podcasts, joining trading communities, taking mini courses when you're ready. And yes, keep listening to the Crystal Ball Markets podcast for hands-on, no-nonsense financial learning. Final thoughts. Start small. Think big. That first $100 portfolio. It's more than just numbers. It's the beginning of your financial confidence. It's practice. It's momentum. And most of all, it's proof that you're taking ownership of your future. So start where you are. Build slowly. Learn as you go. And remember, investing isn't about how much you have. It's about getting started. Ready to start? Head over to crystalballmarkets.com and open your free account today. Whether it's stocks, crypto, or Forex, this platform is built for beginners. Headphone preferred to learn on the go. Subscribe to the Crystal Ball Markets podcast for tips, walkthroughs, and beginner-friendly insights. Until next time, I'm Sophia, and this is Financial Market Insights for Traders. Stay smart, stay steady, and keep building.